Okay, so let's be real. Have you ever tried to automate your financial reporting and it just breaks all the time? If that sounds familiar, you're in the right place. We're about to unpack a fundamental lesson from CPA Sung Lee that completely flips the script on automation, and it might just be the thing that fixes your system for good.
We all dream of it, right? That perfect push-button financial reporting system, the one where everything just works. It's kind of the holy grail for any modern finance team.
But the reality is, you just keep hitting a wall. You've got the tools, you've got a smart team, but the automation is always breaking, or it needs constant tweaking, or maybe it never even really gets off the ground. And let me tell you, it is incredibly frustrating. We've all been there.
So here's the big idea, the thing that changes everything. It comes from Sung Lee, and it's this. Automation doesn't start with code. It starts with structure. Let that sink in for a second. The problem isn't your software, it's your foundation. And that's what we're going to dig into.
Okay, so if the problem is all about structure, where do we even begin? Well, we got to go right back to the start, to the absolute bedrock of all financial reporting. This is where the real work happens, long before you write a single line of code.
In that bedrock, it's built on two things you're already producing every single month: the trial balance and the general ledger. The best way to think about it is simple. The trial balance, or TB, is the summary. It's the final score, the culmination of all your debits and credits. The general ledger, or GL on the other hand, is the narrative. It's the detailed story, the audit trail behind every single one of those numbers.
Now, here's the really crucial point. You can't have one without the other. They are totally inseparable. Every single report you generate, I'm talking balance sheet, cash flow, you name it, it all traces its data right back to the integrity of your TB and your GL. And if you get this part wrong, well, there's no amount of fancy code in the world that can fix it.
So how do we fix it? Well, the good news is you don't have to go out and buy new software. This is a design challenge. We have to start thinking like architects and build a smarter blueprint for our data from the very start.
So, a trial balance that's actually built for automation has 4 key principles. First, granularity. You've got to separate things like income tax paid from interest paid. Don't just lump them together. Second, categorization. That means creating distinct, separate lines for things like asset additions, disposals, or transfers. Third, consistency. This one is huge. You have to use the exact same structure month after month, year after year. No exceptions. And finally, clarity. I mean, use names that a human being can actually understand.
And that last point, clarity, this is what it looks like in practice. Account 1104. What does that even mean? It's useless to a reviewer, and it's useless to an automation script. But dealer bonus prepaid? Ah, now that tells a story. It gives you context. It makes the whole process transparent.
Now, all of this thinking rolls up into your chart of accounts, your CoA. You need to stop thinking of it as just a list of accounts. It's the master blueprint for your entire reporting system. When you design it right, it can serve everyone. Management, external auditors looking at IFRS or GAAP, even the tax team, all from one single source of truth.
And this brings us to Sung Lee's brilliant 4-step approach. And just look at this. Look where automation is. It's step 3, not step 1. You have to structure your data first, then you standardize your process. Only then do you automate the mechanics. You finish up by analyzing and adapting. See? When you follow this order, automation becomes the natural, easy outcome of good design, not this painful, frustrating thing you're trying to force from the start.
All right, this is where it gets really clever. So we've got the high-level structure down, but how do we automate the nitty-gritty details, like the notes to the financial statements? Well, the secret is hiding in plain sight, right inside your journal entries. Here's the secret. That little description field in your journal entry, it's not just a text box for you to jot down a quick note. No, you have to start treating it like a structured, parsable data point. Once you make that mental shift, a whole new world of automation opens up.
Just look at the difference here. The before is what most people do. Monthly accrual for software. It's fine for a human, I guess, but it's messy for a computer. But the after? It's a clean, structured string using simple pipe dividers. A tool like Power Query can look at accrual, marketing, Project X, Nov 25, Invoice 123, and instantly split it into 5 clean, usable categories. It's suddenly become machine readable.
So what's the big deal? Well, this one simple change creates the connective tissue between your super detailed GL and your high-level financial statements.
It lets you automatically map transactions to specific note categories. It means every single number in your disclosures can be traced right back to its source. And it lets you do incredibly detailed management analysis without any manual work. It's an absolute game changer.
Okay, so let's talk about the real payoff here. Why go through all this effort? Because when you adopt this structure-first approach, you're not just cleaning up a spreadsheet, you're transforming your entire finance function, really from chaos to complete clarity.
And yeah, of course you're going to be more efficient. But the real benefits, the real prize, goes so much deeper than just saving a few hours. It's about gaining something far, far more valuable.
It's about these 4 things right here. You gain control, real control over your data. You create true transparency in your entire process. That, in turn, builds trust in your numbers, both internally and externally. And when you have all of that, you free up your team to focus on the one thing that really matters: generating insight.
And that is the ultimate goal, isn't it? To transform your team from being data firefighters, constantly putting out fires and fixing broken reports, into what they were always meant to be: strategic analysts who are actually guiding the business forward.
So this whole explainer really boils down to one critical question, one that I want you to take back to your team. Look at your own systems, be honest with yourselves, and ask this: is our trial balance truly built for automation? Because getting that foundation right, well, that's the first and honestly the most important step of all.